Hello, the Money Wizard here, and welcome to the first video that will demonstrate the power of the Money Wizard that can be downloaded onto your iPhone. The math of money is vital when you're making decisions about money, whether it's investing in real estate, buying your first home, investing in the stock market, or planning your retirement. Money mathematics will determine the vital elements of your decisions, such as a rate of return, how much you pay on a loan, is this investment good value, can I afford to retire? The Money Wizard performs quick, straightforward calculations using a very powerful set of mathematics equations that everyone can understand. And this set of videos will demonstrate some of the money decisions that can be made with more accuracy and comfort. For this first video, we're going to look at buying a piece of real estate. When buying real estate, we need to determine if the core reason for doing so is to generate income or appreciate the value of the property. If you are buying to gain on the appreciation of the property primarily, then the yield is not as important now. For example, the rental income over the property value. The important number is growth. Let's look at this first. Now, due diligence is beyond the scope of this lesson. Things such as, is the property in a flood area? Or is the property near a proposed nuclear reactor? You have to do this type of research. We're going to look at the finance only. The first thing you must understand is, will the property give you a return that is equal to general market trends? To do this, take the value of the property now, this time last year from an old advertisement of an adjacent property, and the year before. Use the Money Wizard to work out the return achieved over year 1, year 2, and beyond if possible. Let's say you're thinking about buying a property for $600,000. Go into the investment section of the Money Wizard. Click Term. This is what we want to find. Enter $600,000 in the Future Fund box. Last year, a similar nearby property was sold for $575,000. So enter this as the initial fund and a term of 1. The rate of return is 4.35%. Now enter the price of a similar property sold 3 years ago as $550,000, and the result is 2.94%. Now equate this to general market trends. If it's above market trends, then the property and its area may be spiking high and is a good buy. Or the market is on the move, generally above 5%. If the growth is between 2% and 5%, then the pricing may be stagnant and may be a bad buy over the short term. If it's negative, either the area or the market is in decline. Watch out. The next thing you need to understand, or stress test, is can you afford to pay the loan or mortgage on the property during the period you own it? This is purely a cash flow decision. For example, have you got the income to support the loan? Have a look at the bank rates. They don't differ that much, but 0.5% can make a massive difference when paying a mortgage. And figure out where you can borrow based on the bank's criteria for investment real estate. And then use the Money Wizard to calculate the repayments. Let's go into the loan area of the Money Wizard and work out our repayments. We intend paying $50,000 cash and borrowing the rest, $550,000. Enter $550,000 in the principal, 15 as the term, the maximum time we will hold the property, and 4.5 as the rate, taken from published bank rates. And we get $4,207.46. Now use the Money Wizard to work out the most appropriate loan profile, the term, escalation of repayment, balloon repayment, that will suit you when buying the property, maintain it and its mortgage, and then sell it within your time frame. Let's escalate the payments with inflation of, say, 3% so that our repayments increase with the Consumer Price Index. The payment reduces to $3,431.62. Now let's try and get a better rate. Say 4.25%, and we get $3,369.97. If we wanted to perform this loan as interest only, for example, the profit will only be the appreciation of the property, enter $550,000 into the balloon payment, and we get a repayment of $1,586.56. We have gone from monthly repayments of over $4,000 to just over $1,500 for the same investment. So you can see you can really play with the makeup of your investment. You should now have a good indication of the financial profile that suits your investment. For example, there appears to be growth potential. I can afford to borrow the money. I can manage if I need to hold the property longer because things have not turned out as positive as I first thought, etc. Well, that's all for now. Check out our other Money Wizard help videos on YouTube to learn even more about financial calculations.